Hey everybody, Rob Maurer here, and today we are talking a little bit about Giga Shanghai and the delivery timeline for the Model Y made in China. We have a little bit of news on the nickel supply chain, Tesla's PR team, some comments from Chamath on Tesla, and a couple competing EV updates. First, let's start with the stock though. Tesla stock on the day today finished down 2.75% to $413.98. That compared to the Nasdaq down 1.6%, but I really just mention it to bring up one specific portion of trading today. About an hour and 15 minutes before market close, the stock fell sharply by about 2% over a couple minutes. Those always lead to questions of what happened, so if you haven't had a chance to see, I wanted to explain it. The indices all dropped sharply at that point in time as well, and that was right after Trump tweeted that he was rejecting a $2.4 trillion proposal for a coronavirus-related bailout, and that he was going to stop negotiating on that package until after the election. So that was the news that caused all stocks to drop right at that period of time, nothing specifically related to Tesla. Alright, first up in Tesla news today is a report from Tasmanian on Gigafactory Shanghai Model Y production. They are saying, quote, "A source familiar with the case, but on condition of anonymity, told Tasmanian that mass production of Model Y at Giga Shanghai would begin in December," end quote. Now, there is no qualifier here on what would constitute mass production. Elon in the past has referred to volume production as being more than 1,000 vehicles per week, but of course, this source could be interpreting things very differently. It does say also begin mass production in December, so my interpretation of that would be a targeted production start date for actual vehicles to be delivered to customers, not necessarily mass production. This possibility of Model Y Shanghai production starting in Q4 has been something we've been talking about for quite a few months now, so I don't think this is necessarily a surprising rumor for those of us that have been following the situation closely, but just like we talked about yesterday with the progress at Gigafactory Berlin, the closer and closer that we get to these dates, the higher the likelihood becomes, and once the actual production start date hits, we can use that as a benchmark for Tesla's progress in other areas or other factories. The other interesting part of Tasmanian's report here has to do with Europe. They say that, quote, "Tasmanian source also dropped some unexpected and exciting news. The China-made Tesla Model Y will also be delivered to the European market starting in December 2020. This will come as very welcome news to Europeans who are eagerly awaiting the start of Model Y sales," end quote. As I said on Twitter, for those of you that follow there, this news doesn't make much sense to me, so I am skeptical of at least this piece of the report, and I think it would call into question the credibility of the rest of the report if the rest of the report didn't really align with the expectations that we pretty much already had previously. I don't really see a great argument for Tesla exporting any of that initial Model Y Shanghai production, when it should be very obvious that China should be able to absorb all of that initial production, at least for some period of time. I think for a long period of time, but even if you don't think that, there's obviously going to be a backlog of demand for the Model Y in China, coinciding with low initial production rates, so just given those two functions, it's going to take a while for that demand to be fulfilled, even if you do think that demand level is relatively low. If you can sell it in China but instead ship it over to Europe, you're really just adding costs for not really much of a reason, especially when you have Giga Berlin hopefully coming online sometime around 3 to 6 months after this. Some of the counterpoints to that I have seen are that maybe Tesla would want the Model Y to have a presence in Europe for that period of time to help keep people interested in the car so they don't go ahead and purchase competing vehicles. I think if that were the case, Tesla could have shipped over some Model Ys from Fremont. That same logic would apply, but Tesla didn't choose to do that. So I don't know why the Shanghai situation would be much different, other than maybe some tariff differences. But again, if you just sell it in China, you're not getting a tariff anyway. So I don't think that makes much sense. I've also seen speculation that they would be producing the right-hand drive Model Y. I do think at some point that will happen in Shanghai. I just don't really see a good reason for that to be the initial production. I think they'll start with left-hand drive, unless they started with both simultaneously, which again, seems unlikely to me. So I think really the only reason I could get behind would be to distribute more performance Model Ys from that initial production, because maybe the demand pool for that in China could dry up relatively quickly. Even that logic, though, could have applied to Fremont, and we didn't see Tesla take that action with intercontinental deliveries. I think what's most likely, and Calvin Yang also replied similarly to that Twitter thread on this, saying that something is probably being lost in the communication path here, and maybe that part of the message is that production of the Model Y will start in December of 2020, and then eventually the Model Y will be shipped out to Europe from Shanghai, which could still make sense, even with the existence of Giga Berlin, if Shanghai is the production hub for the right-hand drive variants. Anyway, long-winded way of saying that if I were a European Model Y order holder, I wouldn't be too excited about this rumor. Next up today, we just have another quick report on potential nickel supply. Bloomberg is reporting that Tesla is talking with BHP Group for a nickel deal, but that, quote, talks are held up on pricing, and no final agreement has been reached so far between the automaker and BHP, the world's largest miner, said one of the people requesting anonymity because the talks are private, end quote. I don't have much more to add to that other than just to point out the flurry of activity that we have seen from Tesla since Battery Day. As usual, they're wasting no time on these things, though I'm sure a lot of the reporting has been a function of people starting to look closer into Tesla's moves in the supply chain and starting to ask those questions. But still, since Battery Day, we've heard of an agreement with Piedmont, we've heard of a possible agreement here with BHP, Tesla exploring nickel options in Indonesia, Tesla acquiring ATW, just a lot going on the last couple of weeks. Normally, I would say we should keep an eye out for a possible contract here with BHP and see if there are any details that may indicate Tesla's production targets, but they pretty much told us all their production targets at Battery Day, and now we get to kind of do the reverse and just watch the execution and all the pieces fall into place. The next story here comes from Electrek. They had an article out today with the headline of, quote, Tesla dissolves its PR department, a new first in the industry, end quote, with the article continuing on to talk about how Electrek hasn't received a response from any members of a PR team for a long time, and that, quote, the move has been confirmed to Electrek at the highest level at Tesla, with the source saying, quote, we no longer have a PR team, end quote. Electrek also says at the beginning of the article, quote, Electrek can confirm that Tesla has dissolved its PR department, technically becoming the first automaker who doesn't talk to the press, end quote. So I have some mixed feelings on this. I think we'll start with that last point. Tesla talks to the press all the time. Elon Musk on Twitter talks to the press all the time. Saying that Tesla doesn't talk to the press is a complete mischaracterization of what Electrek is trying to report here. They're trying to say that there's not an official PR team anymore at Tesla. That is probably true, but that is a very different thing from saying that Tesla doesn't talk to the press at all, or saying that Tesla doesn't do any PR. Even Electrek says, quote, Tesla still seems to have a few PR managers in European and Asian markets, but the core global team working out of the US has been dissolved. There are obviously still people arranging test drive promotions for YouTubers, but their role isn't in a traditional public relations capacity, end quote. So, okay, there are PR people. We also know that Tesla has an investor relations team that is doing a lot of work as well. We can see that in things like the impact report. We can see it in the updated shareholder letters, the new redesign of the IR website, integration with Say, allowing retail investors to actually ask questions. So I don't think it's really fair to characterize Tesla as some sort of super closed off organization, just due to a potential lack of an official PR team in the organizational structure. Now, all that being said, I obviously said a week ago that if Tesla was feeling that the press wasn't really understanding implications for things like Battery Day, something that Tesla could do to help that would be to have a press release ready to go for these reporters to kind of piece together all the information quickly and efficiently so that they can get their breaking news reports out, which they're required to do, in a more accurate or effective way. I think there is no question that that would improve coverage for things like Battery Day, but at the same time, that's not a necessary thing to do. At the end of the day, that responsibility does fall on that reporter, that publication, to do their homework and to get it right. But Tesla needs to recognize that that's not always going to happen. If Tesla wants to help with that, they can, and in the absence of that, I don't think they should be too surprised at the poor coverage. Now, as for the other elements of a public relations team, Electrek seems to be really bothered by the lack of response to inquiries. I get that desire, but at the same time, really, what is the point? They're going to be constantly bombarded with questions, which probably 99% of the time they can't comment on, or any commentary needs to go through Elon anyway. So personally, I'm not sure exactly what purpose that would serve. And again, I think Tesla as a whole is extremely communicative, where most of what you need to know or most of what you can know is already out there anyway. You just need to go and track it down. For example, I have questions for Elon. There are things that I want to ask him. There are things that I want to know about Tesla's business. But questions for a PR team, I don't even know what I would have. I mean, I would ask them about that Model Y roof story. I would ask them about this BHP stuff. Those are the types of questions a PR team is going to have to field day in and day out. And most of the time, they're just not going to be able to respond to that. The reason other automakers and other companies in general have larger PR teams is because they don't have Elon on Twitter with 38 million followers, or whatever he's at now, communicating on a lot of this stuff directly and in real time. It doesn't go through this big PR team to polish it up to the point where you get a statement that really doesn't say anything. Do I love how that goes all the time? No. Do I love that Elon seems to have this very specific select group of people that he responds to? No. Maybe if I were in that group, I would like it more. But if I have to choose between that or this PR team and never hearing directly from Elon, I'm going to choose directly from Elon every time. So I guess I have a lot of thoughts on that. Let me know what your thoughts are in the comments, but let's move on. Next up are some comments from Chamath on Tesla. He was on CNBC this morning, always has interesting things to say. If you're unfamiliar, he's a billionaire VC/investor, and he's been very bullish on Tesla for quite a while now. Anyway, the interview started off by the classic question of competition, and if the fact that it seemingly is starting to finally arrive, if that is important to Chamath, and he said, quote, "To be really honest, I don't think it means anything," end quote. Continuing on to explain that by saying, quote, "The value of this business is about deregulating energy. That's about batteries and battery storage, and it's about disrupting utilities," end quote. He's very focused on the energy business, saying Tesla had a roadmap to create energy independence at the individual level, and a legitimate path came out of Battery Day for the disruption of utilities over the next 2 to 3 years, mentioning how many hundreds of billions of dollars are tied up in market cap or debt supporting those businesses, and how all that value will start to become suppressed as disruption starts to take hold. Chamath is a very eloquent speaker. I think he makes his points very well. He wrapped things up by saying, quote, "From my perspective, I think Tesla continues to be underestimated. I think it is generally misvalued, and I think that the people that are trying to compete with them are not the people that they are competing with. They've sort of moved on," end quote. I think that was a great way of putting it. Tesla is just looking so far ahead. They're not focused on what competition is doing, where everybody else is just hoping to find a way to somehow catch up with Tesla. Tesla is out there focusing on what's new, what's next, how can we drive this cost even further down, not worrying about things like how much R&D or CapEx to invest in their internal combustion engine vehicles versus their EVs. So speaking of those hopeful competitors to Tesla, one that has received a lot of attention has been the Polestar 2, which remember is a brand owned by Volvo and Geely, and the Polestar 2 is an all-electric vehicle that started production earlier this year and should be shipping in the US later this year. So ahead of that US release, the Polestar 2 has now received its official EPA range rating, which has come in at 233 miles on the combined cycle. That is, of course, about 90 miles shorter than the 322-mile range on the long-range all-wheel drive Model 3, despite the fact that the Polestar 2 actually has a 78 kilowatt-hour battery pack, slightly larger than the 75 kilowatt-hour pack, roughly, of the Model 3. In the US, the Polestar 2 will start around $60K versus, of course, $47K for the all-wheel drive long-range Model 3. But for at least a little while, that Polestar will be eligible for the federal $7,500 tax credit, bringing that starting price down to about $52,500. So the Polestar 2 doesn't look like the most competitive electric vehicle that we've seen, not the least competitive either. We'll have to wait a little bit longer for more real-world range testing. Looks like Bjorn Nyland had tested it and got about 270 miles of range at 56 miles per hour and about 190 miles of range at 75 miles per hour. So at 65 to 70, you're probably looking pretty close to that 233-mile range. Then, of course, the question becomes charging after that. To wrap things up today, we have a strategy update from Daimler on the Mercedes-Benz business unit, outlining what they refer to as a refocused strategy for seemingly sort of the next decade or so. I think on the face of it, the presentation talks about a lot of good things. It talks about growing their electric vehicles, rapidly expanding their EV portfolio, launching a dedicated electric vehicle platform, things like this. But these are just details in a higher level strategy that personally I feel is flawed. At the very beginning of their presentation, they have a slide outlining sort of 6 pillars of their refocused strategy, which begins with think and act like a luxury brand, focus on profitable growth, expand customer base by growing sub-brands, embrace customers and grow recurrent revenues, lead in electric drive and car software, and lower cost base and improve industrial footprint. Personally, I think almost all of these sound pretty good. I think, as we've talked about in the past, they should definitely focus on the luxury element. Tesla doesn't seem as interested in playing in that space. I have no problem with them growing sub-brands. I think that's a great way actually to grow electric vehicles. They talk about their desire to lead in that space as well as in software, lowering their cost base and improving their industrial footprint. Sure, sounds great. And embracing their customers, growing recurrent revenues. I think any business would be delighted to do that. Where I personally feel like a flaw comes in with this strategy is on their focus, which they say is on profitable growth. To me, I think it's very clear that the automotive industry right now is in a very, very dramatic period of disruption. And I think one of the biggest mistakes that companies make is overemphasizing profitability, specifically during those periods of disruption. I used to work in the corporate office of a company being disrupted, and I saw this impact our decision-making process day in and day out negatively. Long-term viability is sacrificed for short-term profitability because that is what the executives are compensated on. Daimler in their presentation says that they are rethinking their volume ambitions and emphasizing profitability first. They even go as far as saying that they want to, quote, reinforce our contribution margins with our current portfolio shifting upwards over time, end quote. I'm sorry, Daimler, but you have to compete with a company that just went through, 16 years of operations with no profit, in fact, losing a ton of money, to develop the technology that's going to be taking that market share from you. If your reaction to that is to double down on growing profitability, you're not going to be successful. There's just no way. To get through this disruptive chasm in the automotive market, you have to go through a period of pain. Definitely not say you're going to do the opposite and try to grow profitability during that period of time. It just makes no sense to me. Actually, I take that back. It makes complete sense. It's a short-term focus, not a winning long-term strategy. The worst part for Daimler is that they're going to be trying to grow profitability in these segments with declining volume. Tesla and other electric vehicles are going to eat the market share of these internal combustion engine vehicles that Daimler is hoping to grow the profitability on. Economies of scale are extremely important in the automotive business. If those decline, your profitability naturally decays very rapidly, and then you're going to try to grow the profit margin on top of that. There's just no great path of doing that. If there were easy costs to cut, those would have been cut a long time ago. In many cases, probably most, if not all cases, these legacy OEMs have already been playing that cost-cutting game for a couple decades now at least, because management 5 years, 10 years ago, 20 years, they all had similar goals of trying to increase their profitability. So I think most of the low-hanging fruit on the cost side has probably already been picked. So anyway, it's not like I would expect them to communicate this differently. They have value investors that are looking for profitable growth from them. That's a great thing for them to say for their investor set. But that's kind of the essence of the problem, and I think their focus here on profitability is going to end up being detrimental to their long-term viability. Other than that, there are just sort of the typical things that you would see from an internal combustion engine vehicle manufacturer when they talk about their EVs. For example, they've started using this nomenclature XEV, which indicates a variable covering both BEV, battery electric vehicle, and PHEV, plug-in hybrid electric vehicle, and they tie many of their goals to XEV. For example, by 2030, they want XEV share of greater than 50% with, quote, very high flexibility, end quote. Even worse than that, in my opinion, was when they were talking about their next generation electric vehicle platform, which they describe by saying it's an uncompromising electric-first EV architecture and modules. Mercedes COO and head of R&D describe the platform by saying, quote, we can fit an ICE engine in the front of the car if we need to, for as long as the market demands it. This is a great economic equation, end quote. I guess I'll take the easy one and say, Daimler, you might want to run the math on that again. This is sounding dangerously close to BMW's power of choice strategy. So I don't know, just a lot of red flags in there for me. If you want to take a look for yourself, I'll put a link in the show notes to their presentation and to the deck. But that is where we will wrap it up for today. As always, thank you for listening. Don't forget to subscribe and sign up for notifications. Make sure you're following me on Twitter at Tesla Podcast. And I'll see you tomorrow for the Wednesday, October 7th episode of Tesla Daily. Thank you.